Hi everybody, this is Martin here. We at iVSAChart would like to welcome you back to our annual Market Conference and Investment Outlook for 2018, featuring speakers with years of experience in their industry to share their opinions and insight in the market with you. So I hope to see you in our March 25th, 2018 workshop, and click below for more information. I'll see you there soon. Hi, this is Martin here, founder of iVSAChart, and coming you another market outlook for week ending 9th of March 2018. Again, we have a disclaimer in here, so do take a look and pay attention to what we have to say are merely for educational purposes. Alright, definitely the 9th of March 2018 headline still remain the trade war. Now we have seen Donald Trump really going ahead with the tariff agreement, and he did on the White House to sign it, and that begins the trade war. Even Nike's, apparel, footwear, chocolates, and some of those products that actually come into US are being hit, except pharmaceuticals. So all these are luxurious items, tend to have some sort of a war between the China and the US. At the end of the day, any trade war is not good for the stock market, and that's what we are seeing today. And that's what we're seeing, the stock market sell off every day, the global market sell off every day. No matter, the so-called Dow 30 has recover a bit. Last week we are still around 24,400 point sell-off, and last night the market closed back about 0.4% in here. Stock market remained calm because there was some softening stand on the metal tariff. Mexico and Canada and a couple of airlines will be excluded of it in here. And on the technical side, on the market, we have formed what we call a double bottom. A double bottom, which actually signifies, which is the low of the market is already here. So that's on the very positive side on what we see on the technical side. So just make sure of that one. Now, overall, the brick and mortar store retailer, and some of you who have watched previously in some of our market outlook, I did talk about Alibaba, and that is the Alibaba and Amazon, and that's the next stage of where all these store retailer will do well. Now let's look at it. Myers, which I used to study in Australia. We always remember Myers has been a brand name for almost 36, 38 years. They are really going to go close shop, you know what I mean? And another one, the US operation just came out for Toys R Us. Remember when you were adult, those of you who have family, remember you buy toys for your children, they are also going out of operation. Except the Toys R Us in the Asia is managed by Li and Feng in China, maybe better management, but the US operation is no longer there. Now remember the retailer, which is the food and beverage, A&W. Do you remember that? You can't find it in US anymore, but it is available still in Asia. I still think Toys R Us has a bit more to go, especially in Asia where family still likes to go. But the onslaught of Amazon and Alibaba and Taobao, these are the one stocks you want to be investing. So just make note of that one. Now all markets currently covered by the ATA, iVSAchart remain red diamond sell to today. That is the US, NYSE, the Nasdaq, the KLSE, the SGX, and the Hong Kong Exchange all remain to be red diamond sell to today. All right, take note of that. Now let's look at the chart of the week, which we want to talk about is the stock market volatility index. Now this is something we normally look at the US for what it gives you some sort of a barometer where the market is. Now if you look back 2018 in here, when the market is typically low, just below 10 weeks of 10 here, right? That's where you see the market continue to go up. But when the market hit above 20 VIX, which is 20, this is where you start seeing a lot of volatility, and that's why we saw this thing just sort of market crash as we have in here. And the reason the market correction we saw on the US interest rate rise, because when the US new Fed chairman who came in on February 5th, remember that chap, Jerome Powell, he's in motion and he's hawkish about the interest rate movement, and that's why we see this retain back up to 20 on over here, and that's something very, very market watcher need to look at. Right now, as we say, it's about 1800. So 1800 markets recovering. Now at any one time, we don't want the barometer, in this case weeks, to hit over 20. If it hits over 20, that's not good. You're going to see a lot more volatility. However, as I said before, the technical side of the market, whether it is US Dow Jones, it is the Nasdaq, the KLSCI, the Straits Times, and the Hang Seng all has formed a double bottom, which actually tells you the low is already there. I'm very positive about it. If the low double bottom can sustain, then we might see the market rally into the front, because all the trade war, all the bad news is already out there. Now remember, these are market corrections. These are not pointing to market recession that we see in here. All right. Now, this is the Dow Jones. As we said before, we have a double bottom in here, and notice the volume and this volume in here. The right side is lower than the left side. That's actually talking very good. We do have a spring and we have a test. We're just waiting for another minor diamond to come in, and that's yet to be seen. So iVSAchart can help you on market timing. On the Nasdaq front, good news. We actually have a minor diamond. That's always good. The Nasdaq is always been a leading indicator compared to the Dow Jones. So that's good. Should we see the breakout above 750 for the Nasdaq Composite? Yet to be seen. All right, that's good. Now on the KLSC side, despite what we have the red diamond, and there were no minor diamond. At one point I was thinking, can the market break back the old high that we hit 1880? Definitely not. The last 2 days there was news of a big margin call. A very prominent investor sort of came out with his website saying this and that caused a lot of the oil and gas, Heng Yuan, you name it, UMW oil and gas, all taking a really big hit, including some of the blue chip stocks too, like blue chip mid cap like Inari and Press Metal taking in, which is actually coming from the US tariff war. That's the one that we talk about, where Donald Trump imposing 25% on the metal tax and 10% on the aluminium. But we all know Press Metal did came out saying the export to US market is just 1%, but market has dropped. It does represent an opportunity for people to pick up some Press Metal. Again, check into your iVSAchart. Make sure that's a minor diamond in before you get some. All right. On the Singapore SGX Straits Times, still red diamond in here, nothing more of that sort. We still need to break through back to the 3,500 level here, a resistance yet to be seen if you can break or not. Now we do have the 3450, right? Now the double bottom, what we talk about is here, all right? So hopefully you can break up. And again, this volume here is lower than this volume. That's to me a very positive technical indicator, all right, from a Wyckoff standpoint. On the mid-cap stock SGX, after it created a stage 4 markdown, we are still in the beginning of a stage 1 sideways movement. So we yet to be seen whether we see a minor diamond or not. So that's one thing good about the iVSAchart chart. Hang Seng, similar to a double bottom that we see here. We got a test in here, volume's definitely lower. Hopefully you'll see a retest back to here in no time, and that's yet to be seen if we see a minor diamond coming up or not. All right, let's look at the top leader, gainer and loser. Definitely one of them done very well is Best Flow. Since the minor and the major diamond, it went up 33.8%. You could see here this market sort of accelerated up. All right, top SGX loser for Singapore is Hanwell, a minus 11.8% down that we see in here, right? And where we have the top gainer for the KLSC is no other than Muda Holding. Very similar setup. We have a minor diamond and the market sort of just propel up very, very fast. I think this is probably awardment of a project, a 69.3% up gain. And the top 1 week loser for the KLSC in this case is Ucrest, which is the old name is Palette Multimedia. I think they did change the name. It did have a buying climax in here. You can see volume is very high. Every time you see buying climax, do be careful. They tend to be very, very bad because smart money are distributing. And you can see eventually we have a red diamond here. For after the climatic widespread bar, market go 1, 2, 3, 4, 5, and then break down, and then broke down some more here. That's almost 32.6% down. But then again, the small cap stocks on the KLSC are undergoing major correction. It's been breaking down almost 8 bar consistently down. All right. So that's all we have from myself, Martin Wong here from iVSAchart. I'll see you next. Do visit our website, iVSAchart.com, and our Facebook and also our YouTube channel, iVSAchart. Thank you very much.